I think there's a clear distinction to be made within the Benelux context between somewhat the larger companies, those in need of debt beyond 250 million, and the smaller companies. You see that the dynamics for those 250 beyond are very favorable. Of course, these are companies that may require ratings, yes or no, but once they have the rating, that they have access to the international institutional liquidity. So there you see the same movements as you see elsewhere within Europe. So you see ample opportunity to refinance, opportunities even to take out some equity when necessary. And you also see a favorable movement in terms of pricing and also quantum. So I would say all signs are on green when you're in that space. Naturally, this is for the good performing credits. There's still clear distinction between those credits that have shown strong performance through the crisis and those who've not. So once you're in more the second bucket, then you will be looking more at relationship banks and relationship funds for that matter to secure financing going forward. And then you're looking at refinancings more in the form of amend to extend than rather a whole new refinancing. Then if you look at the second bucket being the smaller companies, mid-market, they're very much dependent on the bank landscape, I would say. It's still very much club deal driven. But also there, given the fact that the banks have more clarity on Basel III, for example, banks are willing to lend more and more and more, because one of the reasons that banks were lending less in, say, the last 2 years was very much driven by the uncertainty of what is required from us, what do we need to have as equity. And once this framework is becoming more and more clear, banks and other lenders will be more comfortable to continue in the way forward, because at least we know what we're lending against. Well, of course you have different asset classes, so indeed for the smaller companies it's interesting to look at asset financing, so albeit factoring or securitization or any shape or form. So you see that in combination with a straight senior loan. And if you look at the more larger companies, there you see the high yield bond or the bond options in general when you're looking at corporates. So you see somewhat a more diverse capital structure, and I think also from a corporate perspective, if you have access to liquidity, it's in your interest to have these various pockets of funding that you can rely on when you need to refinance, because particularly the bank market is there, but yeah, it is under constraint, especially in the Dutch context. We have fewer banks active here than we used to have. The bond market is very much liquidity driven and depending on macroeconomic figures. So if the market is not there, it may suddenly close and you may have to fall back on the banks and vice versa. So it's always wise to have a capital structure that provides you with various alternatives in terms of financing.